ever wondered how de-dollarization could potentially shake up the gold market? Imagine a world where the greenback is no longer the dominant global currency. What would that mean for gold, a precious metal that has been a store of value for thousands of years? Could we see a surge in prices, or perhaps a dramatic plummet? This could be a game changer for investors and economies alike. Intrigued? Stay tuned as we delve deeper into this intriguing topic. First off, let's clarify what we mean by de-dollarization. In the simplest terms, de-dollarization refers to the process of countries reducing their reliance on the US dollar. This might sound like a complex economic concept, but it's actually quite straightforward. Imagine the world economy as a large marketplace, where everyone's using dollars to buy and sell goods. However, as the US's share in this global marketplace shrinks, and other economies like China and the European Union grow, these countries start to question why they are still using dollars. They wonder if it wouldn't be more convenient to use their own currency, or perhaps a different international currency. This is precisely what's happening in the world today. Several nations are gradually moving away from the US dollar and towards alternative currencies. This is not to say that the dollar is losing its value, but rather its dominance as the world's reserve currency is being challenged. This shift is driven by a variety of factors, including economic, political, and strategic considerations. For instance, countries might want to reduce their exposure to US monetary policy, or they might want to foster closer ties with other nations. Now that we understand what de-dollarization is, let's explore how it could affect gold prices. Gold has always been seen as a safe haven in times of economic uncertainty, but how could de-dollarization affect it? Let's delve into the intricate dance between gold and the US dollar. Traditionally, these two have an inverse relationship. When the value of the US dollar rises, the price of gold typically falls. Conversely, when the dollar weakens, gold prices tend to increase. This pattern exists because gold is priced in dollars on the global market, so a stronger dollar makes gold more expensive for buyers using other currencies, which can suppress demand and lower prices. Now imagine a world where the US dollar is no longer the dominant global currency. This is the essence of de-dollarization, a shift away from the US dollar as the world's default currency. In such a scenario, gold could become an even more attractive safe haven for investors. De-dollarization could lead to an increase in the demand for gold for a couple of reasons. Firstly, as countries move away from the dollar, they may turn to gold as a stable store of value. This is particularly true for countries with volatile currencies or those that are experiencing economic instability. They might prefer gold over their own currency or other alternatives because of its long history as a reliable store of value. Secondly, if the US dollar's dominance diminishes, it could lead to increased economic uncertainty. In such times, investors often flock to gold as a safe haven, pushing up its demand and consequently its price. In essence, de-dollarization might make gold an even more appealing investment. While it's essential to remember that markets are unpredictable and nothing is guaranteed, the historical relationship between the US dollar and gold suggests that a move away from the dollar could potentially uplift gold prices. So as we can see, de-dollarization could have a significant impact on gold prices. It might not just change the global economic landscape, but also redefine the value of the gleaming, precious metal that has captivated humanity for centuries. Let's wrap things up with some key points to remember. We've delved into the fascinating world of de-dollarization, a global shift away from the US dollar as a reserve currency. This movement is driven by a range of factors, including geopolitical tensions, economic shifts, and evolving financial landscapes. Now, what does this mean for gold? As we've explored, gold has traditionally been a safe haven in times of economic uncertainty. If more countries choose to diversify their reserves away from the dollar, demand for gold could spike, potentially driving up its price. However, remember that this is a complex and dynamic situation. Many factors can influence the price of gold, and de-dollarization is just one piece of the puzzle. That's all for now. Remember, the world of finance is ever changing, and staying informed is key to making smart investment decisions.